If there's one thing that'll give you the most return, literally and figuratively, in relation to just you as a capital raiser and how well you're going to raise capital, if there's one thing you do, that is tracking your data and tracking two specific measurements at least. And then we're going to talk about a third one that's really going to change the game.
The military taught us discipline, it taught us leadership, but it never taught us how to really build wealth and income. This is the Active Duty Passive Income Podcast, and I'm your host, Markian Sich, a United States Marine turned full-time real estate investor and educator. I'm bringing you the most successful military, veteran, and military spouse real estate investors, entrepreneurs, and industry experts to break down exactly how they did it, so you can too.
Hello, everybody. Welcome to the ADPI podcast. Hey, this is going to be very different than what I typically do. So I'm just going to riff about capital raising. I'm going to talk about how to raise money, whether you're raising debt or you want to raise some money for equity in a deal to help you with the down payment, or you want to syndicate a deal and have limited partners who have no operational involvement bring millions of dollars to a deal. I'm going to talk about that. So no guest today. I'm just going to be freestyling, just my thoughts, a lot of word vomiting, some stories on what I've been able to do. And so hopefully you enjoy this ride. All right, let's go. The first thing I would like to talk about when it comes to capital raising is that it's very much obviously a numbers game, right? You're literally raising X amount of dollars, and so you're tracking a number. It's a very quantitative thing, which can make it both more daunting and easier to track. And so if there's one thing that I will say to do, there's a lot of things we're going to talk about today, but if there's one thing that'll give you the most return, literally and figuratively, in relation to just you as a capital raiser and how well you're going to raise capital, if there's one thing you do, that is tracking your data and tracking two specific measurements at least. And then we're going to talk about a third one that's really going to change the game in a minute. So there's this concept of lead and lag metrics. And a lot of different business coaches, business books, they describe this in many different ways, but you can think of it as, so our EOS implementer, the entrepreneurial operating system, which is how Active Duty Passive Income runs, ourselves as a company. He had the analogy of math, or like getting a good grade in your class in math in school or in college or whatever. Let's say you're studying for algebra, right? If you want to get an A in that class, and again, this can apply to anything, and I'm going to tie this into capital raising, but if you want to get an A in algebra, then I believe that no matter what your experience level is with algebra, we all have an innate sense of, and we can start somewhere with figuring out, okay, if I do this, it probably will help me get an A. We should all be able to have some place we can start where the best educated guess of, if I do this, this, and this, it'll probably get me an A. Some of us are going to be better at guessing that. Some of us are going to be less so fruitful in their guesses. But for example, in this particular case, just because this is so relatable, you all know probably, if you went back to your high school days and you started saying to yourself, okay, I'm going to track myself studying for an hour every evening on weekdays, and then I'm going to do 1 hour of group studying on Thursdays, and then I'm going to do a practice quiz on Fridays. And if I do this for 4 weeks in a row, I basically feel like that's going to correlate and create a very high probability that I'm going to get an A on my algebra test, right? So even if you never made an A in your algebra test, you kind of know what it takes, and you can take an educated guess. So the same thing applies to capital raising. If you know that you want to raise $1 million, you have to set up those lead metrics and the lag metrics. So the lead metric is studying every weeknight for an hour, so every, 5 times a week, right? 1 hour, 1 hour, 1 hour, right? And then doing a group study, and then doing a mock quiz or a practice test, right? Those things you can track literally in a spreadsheet or on a notebook, on a piece of paper, and sticky notes, I don't care. And you know that the lag metric, essentially the outcome that you're not executing yourself, but will be an eventual highly probable outcome, is that you're going to get an A when it comes to take the test. So that's something that we can apply to capital raising. And that's something that if there's nothing you do, you should figure that out. Okay. So that is my biggest recommendation. Nothing else I'm going to talk about is going to matter unless you have a consistent lead metric that you're tracking and lag metric. Sometimes these are called scorecard items. So there's scorecards and measurables. So I call them like leading scorecards and measurable scorecards. So leading scorecards are the things you do, and then measurable scorecards are just the outcome that you're measuring to kind of like see if there is truly positive correlation. Like if I only study 5 hours versus 10 hours, will that be a B versus an A, right? You might be able to start correlating that stuff. So, yeah, that's the most important thing. Now, when it comes to capital raising, I do think that it's as simple as just taking your phone, going to your contacts in your phone, going to your friends and connections on Facebook, and maybe even your followers on Instagram, okay? Or any other social media, right? Like just let's just start there. Okay? Anybody can do this. And I believe that all of you probably have at least a couple hundred, between all those platforms and your personal contacts that you can reach out to, right? And so when you start there, this is where you do like you get the reps, you do the practice, the repetition that you have basically now committed to with these lead metrics and lag metrics, these leading scorecards and measurable scorecards, right? And you're going to say, you know what? And this is just an example. Every day, I'm going to pick 5 people. I'm just going to go down the line, alphabetical, in my contacts on my phone, and I'm going to call every single one of them. And if they don't answer, I'm going to call them back until they answer. And you're going to call every single one of them, and you're going to be like, and you're going to do your pitch, do your script. I'm not going to go over like a script right now. I mean, we might get to that, but you offer them the opportunity and you present to them a template offer or like a phantom offer, like an example of a case study where it's like a real thing or more or less what you will bring to them. So you want to show them what they can anticipate when you bring them the real deal so that you can just get a soft commitment so that they're already basically pre-sold and committed to working with you so that when the day comes, like it's game day, it's time to invest, they're already warmed up and prepared. And so that's what you're going to do. And you're going to log all this in a spreadsheet. Okay. And what you're going to notice is that this is just a numbers game. You're going to have people say no in a mean way and in a nice way more than you probably even anticipate. Trust me, it's always going to be more harsh than you think. But just accepting that early on and realizing this is just a numbers game, you'll start realizing, oh, wow, like, I don't know what it is, like maybe 1 out of 10 or 1 out of 20, whatever the case may be, are interested. And I could put them down for a soft commitment. Okay. So maybe that's something that's actually something you want to continue doing. Like you see that, challenge yourself, do it for 30 days and watch that correlation. It is just a numbers game. You're not different than anybody else out there. This will work for everybody if you just put in the reps. It's just like if you go shoot hoops and, basketball, the more you do it, the better you will get. Period. End of story. And I can give you an analogy. I heard this from Alex Hormozy on another podcast, and I love this story. He was basically giving the analogy of the creation of clay pots in a class. So there was a professor that he had 2 classes, both the same amount of people. And what he asked them to do was, hey, so one class, it was like a separate control groups. He was like, one class, he told them, you will get a higher grade the better clay pot or clay vase, whatever it was that they were making, the better it looks, like the cleaner, the more symmetrical, the nicer, blah, 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 blah. And so their only assignment was to create one, right? And the better it was, the higher the grade, right? The other class, he did something very different. He said, hey, the more vases you make in the allotted time period, the higher your grade, right? And it was like, I think they had like a week to do this or something crazy, right? Like it was a lot of time. Well, what ended up happening is, and a lot of us would probably think, okay, those that are just making a ton of vases are probably not going to be looking that great, right? Well, because, they're rushing. But what ended up happening is that class that was trying to just make a lot of them for a higher grade ended up making ones that were way better than anybody in the class, where their whole objective was to make these vases perfect. Okay. And that is just a very, very good story to cement this concept and this understanding that you have to get reps, you have to practice. There's no silver bullet here, there's no magic. You just have to practice. Okay. So I wanted to really just hammer that home. There's nothing else you do. Practice, 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 which is probably not what you wanted to hear. But we are going to talk about some more mindset stuff here that'll help kind of make this grow beyond what I just talked about. So ADPI constantly, like, we believe that you can improve anything you're doing. right? There's no like finish line in how good you can be. And so there's this awesome book by Jim Collins called Good to Great. And in that book, he outlines something he learned over time, which is called the Hedgehog Concept. And he actually broke it down into a Venn diagram on how you can help yourself identify your own hedgehog concept, which sounds weird. Let me explain. And you'll see how this ties into capital raising or how to raise money, right? This is also called core focus. In the book Traction, they call it core focus. In a lot of other spaces, they call it core focus. There's many different names for this, but it's essentially the thing that you do and you do not get distracted. The thing that you become a subject matter expert in. You're not looking to be a jack of all trades. You want to have a core focus. This is your hedgehog concept. This is the one thing that you're going to do. And so this is how you identify what that is. And this is how it's going to help you as a capital raiser. You have to pick something that you're deeply passionate about. Like, think of, hey, I would do this even if I didn't get paid type of level of passion. Okay. If you want to be a capital raiser, then let's just assume that's why you're listening to this and why you're excited about this. Or maybe you just want to learn the mindset of a capital raiser, anyways. But let's just assume that you are deeply passionate in capital raising. Okay. So let's make that assumption. And a lot of times I will say also, even if you're not deeply passionate about something, if you start doing it a lot and you start getting better at it, that momentum is addicting and you will become passionate about it. At least that's how it's worked out in my life. But anyway, I digress. The second part of the Venn diagram, so imagine like these three circles overlapping and there's that overlapping part in the middle, right? Is something that you can, and the operative word here is can, be the best at in the whole world. So can and best are the things that matter the most in that statement. What it really means, that statement, is that you have an unlimited runway in how good you can get. There's no cap, there's nothing that's going to limit you. And that, either physically, mentally, whatever, and that if you just keep practicing and you out practice and you get more reps and you be truly a student of this craft, you have the potential of being the best. And by world, like being the best in the world, we can go break it down to like the micro niches, like, hey, I'm going to be the best capital raiser for apartment complexes in Dallas, right? Now it doesn't sound far fetched because you also don't want to like create such a ridiculous goal to where it's impossible, but that's your world, so to speak, and it still creates an unlimited runway, which is the whole point of the word world there. Like that statement is supposed to make you believe that there's an unlimited runway ahead of you. There's nothing, you don't have to, there's not a finish line. Okay. And so again, there's nothing actually stopping you logistically, emotionally, physically, and you see that there's an unlimited runway. So you can, nothing's stopping you from being the best if you just keep competing. Okay. So that's important. So that's part 2 of the hedgehog concept. Part 3 of the hedgehog concept is that you pick an economic engine. Okay. So an economic engine is a really interesting number, and it's honestly kind of changed my life. An economic engine is the number that if you track and grow this number, that everything else, without a shadow of a doubt, is working out just fine. And typically, this can be like a lag metric, like something you just measure. Okay. So maybe you can't control it. So this thing you will want to grow by iterating and making better your leading scorecards, the things you're doing every day and every week, but those typically aren't necessarily your economic engine. Your economic engine is like the outcome, typically, again. And so here's one example of how this would work. And then I'll give you an example of how this could potentially work in capital raising. So I own an apartment complex with my parents, the 56 unit apartment complex. Okay. And by the way, let me just pause here. If you really like what I'm talking about and you would like to be a capital raiser and acquire large apartment complexes, and this is for you, and you're like a part of the military community, just a quick little plug, go to activedutypassiveincome.com/strategy. Okay. And it'll take you to an application. It's really just a questionnaire to then jump on a call with our team and kind of figure out where you are now and where you want to be in the future, and what obstacles are in the way, and what your personality type is maybe a little bit, and figure out what your role could be on a general partner team that buys these large apartment complexes for investors and gets paid handsomely for it. So if that's something interesting to you, go to activedutypassiveincome.com/strategy. But anyways, coming back to the economic engine, I'm going to give you an example of how the economic engine worked with my apartment complex. And I'll explain to you how I came up with this idea. The root of this was one of our favorite economic engines, if you think about it, is cash flow. You all know that if you are underwriting or analyzing a property to decide if you want to buy it, that if it is truly producing like a healthy cash flow return, that everything else is going to work itself out. The property is going to appreciate over time. The property is going to give you tax benefits. The tenants are going to be paying down the loan on your behalf. You're basically outsourcing your own debt payments to other people, which is wonderful. Like all the other things are going to work out, including like hedging against inflation and all that kind of stuff. So in fact, like truly cash flow is so great that like even if you're breaking even on cash flow, if you're breaking even, you know you're fine, right? You are growing your wealth in your sleep almost because you're good. And so with my property, when I took it over as to self-manage, I really wanted to figure out a way to incentivize my on-site manager, who I hired directly into the company that is the apartment complex. I really wanted to give her a strong incentive that both she loved and I loved, and we knew that it was best for each other on like a personal and business relationship, but also that it was going to be the best outcome for us for the property, and everything else about that property was going to be healthy if we did it this way. And so what we did was, and actually I was talking to one of my partners, Adam Labar. We were kind of strategizing about this. And I think in the heat of the moment, he kind of had this like sliding scale idea. I was already thinking about like the commission structure and how to make it more incentivized. And he kind of brought this up, and I immediately kind of instituted it. Was the first through the fifth, right? The day 1 through day 5 of the month, before you hit your first, late payment, that is the most important time when it is to collect rents, is what was my theory. I was like, okay, I want to incentivize that the commissions that my manager gets on the collections are higher the sooner she collects. Because in my mind, I was like, okay, if collections are very good between the first and the fifth, it means so many things are going well. It means it's being managed well. It means that there's a good sense of community. People are happy. It means that our maintenance is being done on time because people aren't pissed and like, kind of just delaying their payments out of spite. It means that we're screening tenants well who can truly afford our apartment complex, and the rent. It means that maybe a lot of our online payment system, like people are picking up on that and they're actually doing that. It really truly creates a lens through which you can look at. And when you set that economic engine, you're going to start operating constantly while looking through that lens. And you're going to start seeing opportunities that you wouldn't have seen if you didn't put those glasses on, so to speak. And so what I saw as an outcome is for the next 6 consecutive months, our collections, specifically through the first and the fifth, went up every single month for 6 months straight. Then it kind of stabilized and it's still growing slowly, but there was just this ramp, and it just went up and up and up every single month. It was huge. It was awesome. And I'm so glad that I kind of like stumbled into that economic engine for that property. Now, let's talk about what you could do as a capital raiser for your economic engine. And again, actually, let me just step back. I don't consider myself a capital raiser. I feel like I can capital raise in a much easier, almost effortless fashion relative to when I first started out. And I have capital raised millions of dollars, but I don't feel like that's not my specific role on a team per se. I'm more of like the deal acquisition specialist. Like I'll find the deals, and I'm kind of team lead and deal acquisition specialist, and I'll bring this to closing. I'm big on managing, the asset manager. And I feel like that's kind of my place, right? After it closes, like I kind of step into management as well. But if I were a capital raiser, the thing that I was deeply passionate about was capital raising. And the thing I wanted to be the best at was a capital raiser in a particular area or way. I would focus, maybe this would be my first hunch at what a good economic engine would be. I would focus on the average number of capital raised per investor in a certain time window. Maybe let's say in the last 90 days or in the last 180 days. I would look at this time window, this trailing time window, and I would see what was the average amount of capital I raised per investor. Because I feel like if I'm able to raise a larger amount, that means that I'm better at my craft of presenting and selling the opportunity to somebody. So if that number grows, it probably means that I'm getting better and more efficient, because now I don't have to call maybe 1,000 people. Maybe I can only call 100 people and still come up with the same volume outcome of money raised. Additionally, it means I'm probably going up in like status, right? Like I'm networking up the ladder, right? Imagine yourself in this position. You're like, I want to grow the average amount of money that I raise per investor. Like the options are, you either get better, like somebody that could invest 50,000, they might decide to invest less. Or if you're better at raising money, they might actually invest the full amount of money that they have in their bank account that they're willing to invest in the first place, right? Like, so the better you are, the more you're going to get from that person. But also, what if you talk to people that just have more capital available, period. Right? Maybe those are people you don't typically find yourself rubbing elbows with. Since you have these glasses on right now, you're looking through the lens of that number. You're going to start finding opportunities to network with higher net worth individuals. And so that's what I'm kind of talking about. You're kind of moving up that ladder in status or whatever you want to call it. And so that's going well, right? So you now know that you're progressing in your own career that you're building for yourself as an entrepreneur. And then there's just so many things I can continue talking about with that economic engine in mind. But I do think that if you're tracking this and the ultimate outcome is the result. Did you raise enough money to get the deal closed? Right. Okay, got it. But like truly measuring like the rate at which you're growing in how efficient, how talented you are as a capital raiser, I feel like that number is probably what we want to think about. That's my first like suggestion to you all who want to get into this business and be very serious about it. Okay. Okay. Next thing is your personal brand. Look, a lot of people in today's day, because it's so easy to network online, because it's so easy to make connections, it's also easier to get scammed or to scam, right? And so a lot of people are going to be hesitant about your genuineness or like how truthful you are, and they want to know. Everybody's always analyzing the risk like of getting screwed over or it failing, and in this case giving you money and seeing a return. And so having a personal brand in the form of even a simple website or a professional and on brand Instagram or professional on brand X account, LinkedIn account, whatever you want to use. I would say like I feel like Instagram profiles are probably almost more looked at these days than like websites sometimes. People like almost gravitate towards your Instagram page just to figure out about your business more so than even a landing page or like a homepage of a website. And so making sure that that's done right to where when they land on there and you're not doing like, I don't know, cooking videos, but that they see like, oh, wow, this person really is deeply passionate and they truly treat this craft in a way that it's evident that they want to be a master at it. When they see that, that's going to help your conversion rate, meaning the rate at which people do invest in you, it's going to increase. Right. Which, by the way, now that I'm thinking about it, conversion rate could potentially be a great economic engine to track too. In sales, close rate is basically the most important economic engine. So yeah, that's something that I can't stress enough. And on like smaller level, the way you can actually think about it on a day-to-day basis is simply sharing what you're doing with the people around you. And it's a lot easier to do so is when you're in a circle of people that actually care about what the heck you're talking about. So for example, being inside of ADPI campus, like our off Facebook community where everybody is investing in themselves and in their business and networking and learning together and strategizing together and going through our cohorts together, like our 14-week programs. In that area, if you start sharing like, hey guys, I learned, I just had this one capital raise call and it went terribly and this is what I think I did wrong. Or the next day you're like, hey, I had a great call today and this is what I think I did well. And then you tell them you might have a random thought of what you can do the next day. Just share that. That type of stuff is so important because people are going to start having you as top of mind. They're going to start remembering you. And that is, in my opinion, people knowing you drawing people's attention is the greatest form of leverage out there because now you are positioning yourself as a big fish in a little pond de facto, right? If you are the big fish in that pond, A, your confidence grows, B, people start remembering you. And when an opportunity comes across their desk and it makes sense for them to reach out to you, they will remember you. And so that's why I believe it's so important to build your own personal brand and why I recommend doing it in a smaller community, not just necessarily always out there in the open, but focus on building, like leaving a footprint because as a community grows, your footprint will grow proportionally with it, right? So if the pond in which you're swimming is growing, you are going to become more and more impactful and successful if if you have a strong presence there as a big fish in that pond, right? So you can ride on the coattails of the growth of a community if you focus on building your brand in the right way, right? And typically, you need to find something unique about yourself. You need to pick one thing and then you need to do it a lot. So if you're like, I'm going to be a capital raiser, awesome. And then you pick something unique about yourself. Like, I don't know, I'm this huge Dallas Cowboys fan, whatever. You use that as a part of like your messaging all the time, right? Just something that just stands out, right? Or you have a pet snake, like I'm the slithering capital raiser. Just kidding. And you constantly just post about you have that stuff overlap all the time. You repeat, 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 repeat. You do this a lot. You do this a lot. And people will remember you. Oh, yeah, that's the guy that, likes the Cowboys and has a pet snake and is a capital raiser. And the next time a deal comes across their desk and maybe they're struggling with raising enough money, they might reach out to you and plug you in and give you equity just because they remembered you, A, and then B, you are actually able to help them raise capital for the deal. Use communities, use websites, social media as a way to leverage so that A, it helps people trust you more when they do due diligence and they research you and they make sure you're legit. But B, people will remember you. And so now you have maybe hundreds or thousands of people knowing who you are, and they might reach out to you when the time comes. And yeah, so I'm probably going to cut it there. I really, really hope that this was valuable to y'all. Again, if you want to get started in any kind of real estate, just go to activedutypassiveincome.com. If you want to get into the larger type of real estate and you want to raise millions of dollars of capital, you want to join a team, just go to activedutypassiveincome.com/strategy. If you want to raise capital from people that when you're calling people, a lot of them might have a retirement account, right? No kidding, right? Duh. Because they have a retirement account, it means that there's a potential that you can roll that over into what's called a self-directed retirement account. So self-directed IRA, 401k, whatever. There's various different rules. Like, for example, if you're still active duty, you can't do that with the TSP, blah, blah, blah. But, a lot of people have multiple retirement accounts. You can say like, hey, is that retirement account making you happy? They're like, no, I kind of forgot it's there. It's lackluster, whatever the case may be. Be like, how about we take all of it or part of it and we roll that into something that you can self-direct, and then you can invest that money. It's not going to cost penalties or fees tax-wise. It's not going to cause any taxable event. It's still a tax-sheltered thing, but you can invest in my deals from there. And so you could do that for every single person, right? Because they might not have that much money in their savings account, but they might have just enough or more than enough in their retirement account. And that's when you tell them, okay, and while you're on the phone, you kind of like keep them on the line, right? And you follow up if you need to. You tell them, go to activedutypassiveincome.com/IRA, right? India, Romeo, Alpha. And what this will do is this will connect, there's like a little form you fill out. It'll connect them to NCH or Nevada Corporate Headquarters, and they work very tightly with a trust company, so Horizon Trust, and they do the whole setup, with the bank accounts and the trust and everything to have them set up to be able to do this. The end. So highly, highly recommend doing that. I've talked about that on previous podcasts, but I want to foot stomp that. If you're raising money, that is an incredibly powerful tool. Now back to what I was saying. I was just parting ways. Thank you for listening. If you guys have any feedback on the podcast and you're like, hey, I'd like to hear more about this, that, or the other thing, please email support@activedutypassiveincome.com. We're all ears. And that's about it. Markian Sich is out. See you later, guys. Bye.